Sunday, the 15th of April. So as always, we're going to have a look at the FTSE 100. And then we're also going to add in the Forex pair Euro-US dollar. So we're going to look at these markets in terms of the trading areas for potentially day trading the week ahead. Now, starting on the FTSE 100, we have got the chart up from last Sunday. So quickly we'll have a look at how the market reacted to our zones. First of all, on the Monday, pressed up, very strong reaction from that 2115 level all the way back down. And then on the Tuesday, basically Tuesday, Wednesday, Thursday, Friday, the market has been spiking up and testing at this whole section right here on about 280. And it has failed once, twice, 3 times, and 4 times. Now, coming into sort of middle of the week, end of the week, the market went very, very quiet. So you've got the candles here, but during the trading days especially, we're talking 30-point ranges, 20-point ranges on the days. A lot of uncertainty surrounding the markets, pretty much to do with everything that's going on in Syria. And basically, traders are just being cautious. Basically, the markets have just been going sideways and not doing anything. Now, coming into next week, first of all, the start of the week. And we all know what happened over the weekend with America and Syria, so we don't know how the market is going to react. It may put in a strong gap down. It may do absolutely nothing at all. There's really no way to tell how a market's going to react when there is uncertainty like that running through the news. What I'm looking at, just in terms of price action, is that we've spiked up once, 2, 3 times, and 4 times. The market, the way it is holding at present, first of all, it's broken out of our trend channel. When it did that, we were starting to look for potential bullish movements. We've then pressed all the way higher. For me, we're testing at this swing right here, but the very, very key levels, they're higher up. They're really at this 298. We'll actually bring this down a little bit. We're at 293 to 295, all the way up to around about 330. This is very, very key resistance on the FTSE. At present, where we're holding, it's given us the clue that, oops, wrong one. We have a zone sitting here, and it's taking into account the spikes down right here, 1 and 2. So we've got 7227 to 7271. Yeah, pretty obvious, pretty clear zone right here. For next week, with this zone, first thing is this candle right here on the Friday. It's breaking down less now from this area right here. So what I'm going to do is I'm going to bring this level up ever so slightly, like this. And all I'm doing is I'm just taking the most recent price action and letting it show us the potential areas where the buyers and the sellers are interested in the market. So really 225 to 215, this level right here. It's holding as support. If we're breaking down below there, I would then expect to move back down to our 190, well, 7200 to 7180 zone right here, which again is a good level of potential support. But this zone right here is holding. This one for me is still a very key support. You can see we had it last week. For the potential support, if we're starting to break up above, look for the market holding and then that bounce up toward 293 to 330. I'm still pretty much happy to look for that. So coming into next week, depending on how we open, if we're still holding at this level, I'm more than happy to look for bullish bounces, at least up to 270 to 276, and then above that level, expectations of that 290 to 330 level up above. Until we start to get concrete evidence of this market breaking down, I'm still happy to look for those bullish bounces. I'm pressing up to test at the key levels before expectations would then be a stronger sell coming into this market. Now down below, this level right here also at 200 to 180. As we've mentioned, it's a good level of support. If we're breaking down below there, we've really got 165 all the way down to 145 right here as potential support. If we're breaking down below this level, really, I would expect that move down to test. And if we're breaking down below there, then really, I expect at least 7,120 to 7,092 to be tested. But as I've mentioned, the very key level starts again at 7,077 down to 7,044. This is a very key level of support. On the way up here, we've not really had much of a pullback. So what it's telling us, so if you look on the way down here, excuse me, very, very choppy price action. The market's got lots of places to test and lots of places for the sellers to get out of the market and then step back in on pullback, so they're not selling at the lows. Right here, we've only really got this congestion area. And for me, it's not really a significant level. Down here, we start to get a little bit stronger, 165, 144. But if we do see the market coming down and really starting to fail at this level right here, 225 to 215, there is a high probability that we will see at least 165 to 145 tested. And if we're failing there, then I would expect moving forward all the way back down to 75 to 44, which would then be a key level of support. Up above at present, this level right here is very important at 260 to 240 as resistance and support. If the market is holding up above it, it's a great level to look for those bullish bounces higher. You can see where the resistance has been holding above there, and we're coming up to that 290 to 330, which again is very key resistance to then look for the sells once again. And that is everything going into next week, guys. Really the key levels, 1 right here, 2 right here, and then for me it's all the way back down at this zone right here. Okay, let's move on to Australian dollar, US dollar. Okay guys, exact same thing for Euro US dollar. So with this market last week, we were looking at the potential for this market being in a squeeze. We can see the resistance, sloping resistance holding, pressing against potential support, forming that descending triangle. And what we went over was how potentially this was still holding as support. If we broke up above the sloping resistance level, it's very likely we would see the break up into that 12337 to 12367. This zone right here. This zone might be ever so slightly out because it didn't save. And I've just had to put it back on. But I have copied it off of last Sunday's video, so it's in almost exactly the same level. We were looking for the press up into this area, where we were then looking for potential resistance and the move back down to what would then become support or potential support. So breaking up above that sloping resistance level, market presses up, tries to break up above this zone, comes back down, we get very strong resistance once and twice coming in from our zone, and then we come down almost to the pip and test at our 122.98 zone, and the bulls step back in. So coming into next week now, what are we looking at? Well, the first thing is, with this sloping support and resistance, we had the false break back here. We broke up, we came back down, we tried to hold, and then we crashed under and started to trend down the trend line once again. This break right here, we have now broken up and we have held above once, twice, 3 times, and 4 times. So it's giving us a little bit more evidence that potentially this break is going to hold. Now what I'm actually going to do is get rid of this zone. And we are going to adjust it going into this week. The first thing is, this remains very key support now. Really, we need to see the market breaking back down below that sloping support and resistance level before we would then start to turn more bearish once again. And then we'd be doing exactly what we were looking for last week. If we start to break down, we're looking at it as resistance for the potential move down to 121.90 to 121.50. Around about 50, which would then become the next key level of support for the potential bounces back up, and then resistance once again. Very key support at present. Now the market has given us a couple of support and resistance levels. Really it's up toward 12350 all the way down into let's have a look, 12335. Right here. coming into next week, this remains an area of resistance. And then what we're looking for is if Euro US dollar starts to get above this level once again, it's suggesting basically that this break and the attempt to break back down, or the break back down has failed and this break up is attempting to hold, breaks back above this level would then turn the market, or turn our view of the market more bullish, back up toward the previous highs. Really all the way down to 123.70. It's a pretty big zone, to be honest, just because of this strong spike up on the 11th of April. Let's have a look at this. It is worthwhile keeping it as one zone, being a little bit more cautious. Because we've had that strong spike up, it's worthwhile just looking at it as an entire zone. And it remains a good level of potential resistance. Now, if we're starting to break up above there now, again, it's a good level to start looking for bullish bounces. You know, really up into at least these whole levels right here. Let's look at what this closed at. Around about 12415. That whole level there would then become next area of potential resistance. Let's put it in. Really 12420 down to 12405 right here. So main levels next week. This one is very, very key moving forward now. At present, it's holding as potential support. This is also a strong level of potential resistance coming into next week. It's held as support. We've came down, we've broken back up, tested as resistance, rejected, and we've had multiple tests in the past. If we're starting to break up above here, it becomes good support for the bounces into our next zone, which is at the previous highs. Really for me, this and this are the key zones, until we start getting back up to the previous key swing highs. So 1 and 2, very key zones. Up above at the previous swing high since we've broken up is good potential resistance. If we're breaking up above there, really the bounce is higher into 12405. A little bit higher risk, excuse me, would be looking for those breaks up if we break above 12380. If the market starts breaking up above there, you could then start looking for those bullish positions on expectations of that move higher. This should be a little bit higher risk. It's not taking into account the most recent spike up, but it is taking into account the more key levels here, also the very key level here on this spike down. Potentially you could raise it up to a little bit toward the low of this candle, which is 12385 right here. Okay guys, so that is everything for this week. Hopefully you all have a good trading week next week. Hopefully you found that helpful. I'm James Orr, and thank you